welcome back to the Wallfacer Labs podcast. Today's guest is Thomas Mattimore, CEO of ABC Labs, a core contributor to the Reserve protocol. Reserve enables anyone to create yield-bearing, decentralized, asset-backed currencies called R tokens. Reserve has seen impressive growth, with its TVL increasing more than 5x year to date to now over $200 million. Thomas, welcome to the show.
Thanks for having me, Ryan.
Yeah, my pleasure. And great to finally connect on here as well. So,
Yes.
Can you give us, for people who might not be aware, an overview of the Reserve protocol and its mission? And specifically, I've known of you guys since at least 2018 now. So all of the recent growth is certainly not an overnight success. And I'd love to hear how things have evolved over time.
Definitely. So the Reserve project was started in 2019 with a very simple idea. The idea was that we want money that doesn't inflate like dollars and that isn't volatile like Bitcoin, right? That seems like a very simple thing, and in actuality, it's actually quite complicated. But the project was launched in 2019, actually a little bit earlier in 2017. And for the last 7 years, we've been working to help people get access to stable currency around the world. I actually came into the picture 2.5 years ago and joined what became the Protocol Labs company, ABC Labs, as you mentioned. We launched the protocol and we launched the protocol in the fall of 2022, which is kind of crazy. It feels very recent. The Reserve protocol allows anyone to launch an asset-backed currency. And that can be something that looks like a yield-bearing stablecoin. It can be something that looks like a diversified index of products, like a ETH LST index. It could also be, something that is, just generally looks like an ETF. It could be some part Bitcoin, some part Ethereum, some part tokenized stocks. That's the future idea and the future vision is that people can hold a single asset on chain in whatever denomination that they so choose. That is backed by a whole variety of different assets that people generally hold to generate wealth or to preserve wealth and to store their wealth. So we launched 2 years ago now, and since then it's been a fun little roller coaster. We started this year at 40 million in TVL, and as you mentioned, have grown to over 200 million. Before the recent pullback on ETH, I think it was at almost 240 million, which is pretty exciting. And we've seen a lot of growth in the yield bearing stablecoin space, where people want diversified. A big thing that the protocol allows people to do is to get diversification and safety via over collateralization in a single package. And, I think as larger, more sophisticated, more traditional players are coming into the space, that is something that people are valuing more, is diversification, safety, et cetera, which is like, an idea that has been around in traditional finance forever. And now I think you're starting to see that demand in the crypto space as well, despite all of the meme coins and the 100x leverage and things of that nature.
Yeah, that's actually something that defied some of my priors about the type of products that people wanted. Because I guess today your biggest product is ETH Plus, which is a basket of staked Frax, ETH, Lido, and one other Rec Pool. I'm forgetting who.
Yep.
And then other index products as well, EUSD and HYUSD, I think. Yes, HYUSD.
Yes, HYUSD, short for high yield USD for the listeners there.
But I would say historically, index products are not super popular on chain. I think crypto people just have kind of gotten used to having to go out and buy everything directly. And, there's been things like Index Co-op or others in the past that, kind of had their moment and maybe fizzled out. What do you think has gotten people excited about the basket type of products or the index products? Is it a different user base, or where are you guys seeing the success there?
I think it's partly a different user base. There's a couple things that are interesting about the products that are launched on the Reserve protocol versus the products that are launched on something like Index. The big difference is the Reserve protocol is quite sophisticated and actually monitors Chainlink oracles to ensure that there's no underlying depeg risk of the assets that are in the basket. And it also has a mechanism to uh, funnel some of the yield from the underlying to an over collateralization pool, um,
Mm.
which is made up of the governors. And so the governors are on the hook. Governors, or the RSR stakers, which is the governance token of the Reserve protocol, are on the hook for not just making good basket decisions of what's in there, but in the case that any of those things end up being a bad choice, they're on the hook for any of the depeg from that. And we actually, um, the protocol actually went live with money in it, with real funds in it, a couple weeks before USDC depegged.
Mm.
And what was, which was precocious timing, as it turned out, because this critical feature of the protocol was actually tested in real time in a way that we were not expecting with USDC of all things, right? And so the first token that was launched in the protocol is called USD, the electronic dollar. It's an homage to PayPal and Peter Thiel's original vision, and um, it was launched by the company Mobilecoin that has a separate blockchain and app that allows people to use cash digitally. But the what happened was, as USDC depegged, the protocol actually noticed that and was able to offload the bad collateral, recollateralize with the only unpegged stablecoin at the time, which was Tether, or the only pegged stablecoin at the time, which is Tether, and make up the difference with that staked RSR from the governance pool. And so, in real time, you're able to see that the protocol can recollateralize a stablecoin all before the FDIC would open the banks on Monday. And this was like a massive test for the protocol, and also I think a great advertisement of what smart contracts and programmable money can really do. It's for people in the world that don't have FDIC insurance, right? This is a interesting alternative product. It's not insurance. It's not the same thing as FDIC insurance, to be very clear. Uh, my GC would be very proud of me for that disclaimer. But but for people that don't have access to it or who want to have something similar on chain, this new type of mechanism is something that's I think pretty interesting and attractive. Um, but to your point, there's been a lot of index products that have gone up and down over the last couple of years. I think in 2021, index co-op got up to I can't remember if it was 150 or 250 million. I haven't looked at the DeFi Llama chart recently, so don't hold me to that. But it got quite large, right? And I think one of the interesting things you're seeing this also Betterment, the
Yep.
traditional wealth advisor, they one of the original robo advisor. I used to work at a robo advisor, so I'm a slight nerd for the space. But they actually have a crypto index as well. And the first crypto index that they launched was the top 10 coin market cap coins
Ouch.
weighted by value. And like anyone in the space was like, come on, guys. Like, this is not something that anyone not only wants, but should have in their retirement portfolio of all things, right? And so, I think a big part of in the past what has hurt indexes is the curation aspect and the ability to update them. Um, and the and one of the interesting things about our tokens and the ETH Plus in particular is that governance is actually constantly monitoring and making adjustments to the basket in a way that's all transparent on chain, um, and done in a way that the protocol auctions off collateral as it switches baskets. Right, there's like this adjustment mechanism to give the market what it desires. Um, and so yeah, I think that's a big part of it. Obviously, there's also been like everything else in DeFi, there's a variety of different types of incentives flowing around on different platforms and different places as well, that has also obviously helped that grow.
So many different things I can go off there, but maybe I'll jump for a second, just kind of coming back to the demand side for these assets. Uh, so I just for anyone listening, I had a chance to watch your 2024 year in review from your recent monetarium presentation, and that was a great just to kind of get up to speed on where you guys are today. I know historically though, you guys have also had a focus on markets outside of the US. I think some South Latin American markets, Argentina, for example. And you guys have, I think today, a couple mobile wallets that are integrating our tokens as sort of the default yield option. Coming back to the question around kind of the demand side for these, have you found that those users are stickier or different than sort of the traditional DeFi user? And are they viewing this more as just a passive asset that they can hold rather than this hot ball of money that you see in crypto that's always kind of yield chasing?
Sure. Yeah, there's definitely a variety of different interesting user segments in crypto. You alluded to it, the absolutely ruthless mercenary yield seekers, right? Who look, I am one of those people with my personal funds in DeFi, right? I am like, as everyone should be. That there's a group that is uh, there's a savvy group that not as everyone should be. As people that have the time and the energy and the interest should be. The
Sometimes the risk tolerance as well, but
Exactly, the time, the savviness, the risk tolerance, etc. The As they should rationally act is maybe the more accurate thing that I should have said there. But there's there's a variety of different segments of users throughout the world who don't either have the time, they don't have the savviness, they don't want to scroll Twitter all day to know whether or not their stablecoin depegged. They don't want to, know whether or not the thing got hacked or, whatever it is. They just don't care about finance. They just don't care about money markets. They just want a tool, right? And so that's this other segment of folks that we've actually been targeting as a customer segment since the beginning of the project. Another company in the reserve ecosystem, it's called Best Friend Finance. They have an app called Ugly Cash, um, which has launched in Latin America and in the U.S. And it allows people to use stablecoins as money throughout the world. In the US, you get a bank account. Internationally, you get a stablecoin account. You can send money seamlessly in between those places and spend it on a debit card. And a really cool thing that they recently launched was you can hold USD and get some of the yield as revenue. And so USD, as I mentioned, is the electronic dollar. It's the largest and actually the only pure stablecoin on the platform, where all of the yield from the underlying assets that are in Aave and Compound and Maker go towards over collateralization and also toward rev share towards growth mechanisms. The governance recently approved this fintech rev share that sends revenue from the underlying on a fintech to the fintech itself for them to distribute as they see fit. And so Ugly Cash is one of the the big users of that among other companies. And they're sending all that yield at the moment straight back to users, and so it looks kind of like an earn program, powered purely with DeFi, powered purely with transparent on-chain yield generation, unlike some of the things in the past that has burned people, um, like what happened in the last cycle, with the Celsiuses and the
yeah.
BlockFis of the world, um, unfortunately. And yeah, it was actually, I've been in the following involved in the crypto space for over 10 years now, and that was a really frustrating one for me, just to see that all go down, because it was really like actually crypto kind of solved this problem, right? Like when all of the firms collapsed because of under collateralized loans that were non-transparent and off chain, it was just like we solved this problem already. The lending protocols in DeFi performed no problem, except for some of them, like manually pegged Terra Luna to a dollar, right? Instead of actually using oracles. But the ones that were doing it right and doing it properly didn't have any issues because of the way that smart contracts can work automatically and safely, etc. And so yeah, it was a little depressing to see that. And there's definitely been a lot of consumer sentiment around the world burned where people are just like, no, crypto's dangerous. Why would I get involved there? And it's something that I think any company, especially that is working in the consumer space, using crypto as a technology to solve user problems, needs to be aware of and needs to constantly fight against.
Yeah, there was many cases, I think, of wallets that were using Celsius or whoever to power their earn accounts. So having a transparent asset like this is, without a question, a step up. When you're working with a application like Ugly Cash, or I suppose even MobileCoin and their wallet, are there specific features, aspects, things you think about in the product process that are different than if you're designing something entirely for a crypto native DeFi on-chain user? There, you mentioned the fintech rev share program that you guys introduced. Would love to just understand that a bit more.
Yeah, and one quick disclaimer: I'm using the word like we and our a lot. I'm referring to things in the ecosystem. Like ABC Labs hasn't deployed any stable coins on the platform or anything on the platform. We're a development company, uh, development and marketing company. Uh, but it's very interesting. There's it's funny when products like this are developed in DeFi. It's very, I mean, this is actually the same of products anywhere. It's very easy to think a customer is going to be a customer when they actually have no interest, right? And so, like for instance, one thing that we in the ecosystem found interesting was, like um, DAOs have very DAOs seem like an obvious customer and user of a lot of these different products, right? DAOs are slow moving. They care about preserving their runway, right? Preserving their working capital, and they can't yield chase, right? They don't want to yield chase. In fact, right? Like they're focused on building whatever their product is, right? But they are stuck on chain, and so they have to use on chain products. And like originally we were kind of like, oh, this makes a lot of sense. Let's focus on DAOs in the beginning. But it turns out actually DAOs have like surprisingly robust uh, financial teams and decision making processes and criteria for what they put the funds in and things of that nature. Um, I was actually quite impressed with some of the, both like process and logistical infrastructure that DAOs have on making treasury decisions in many cases. And a lot of them are, their focus on yeah, and so it's like in some ways it's totally different because you're building these products in the decentralized world, and a lot of the actually I'll get into how it's different. But like the number one thing that's the same is sorry, I'm getting a phone call, but I'm silencing here. The number one thing that's the same is that you got to talk to users as early and as often as possible. The things that are different though is that building products in DeFi is as much partnerships as it is building, right? And like to make things useful, a lot of it is about like, oh well, once you get this thing, then you need an oracle, and then you need to get with that oracle, you can get the integration over here, and then with that integration over here, it enables this thing over here, right? And it's like the Lego aspect of DeFi makes building products very much a partnerships exercise as much as it is a technical exercise, which is very different from the traditional tech world.
Yeah, that checks out on some of those pieces, like the Oracle, especially. And I suppose in many cases, your users will also want to swap or exchange these assets, probably specifically in the case of a DAO treasury that might want quicker liquidity. It doesn't work without an Oracle. So,
Exactly. And well, it's kind of interesting. I mean, like DEXs are pretty good uh, at pricing assets without oracles. Lending protocols, no way.
sure.
They need an oracle. Most of them, there's some new ones like Ajna or Credit Guild or
Right.
some of these new ones that are very cool, but so far less used. They don't need an oracle, but yeah, the oracle thing is fascinating. There's a lot of competition in that space these days. It used to just be Chainlink, another Redstone, Chronicle, both great Oracle providers.
Yeah, absolutely. So one of the other points you mentioned is the role that ABC plays and also the sort of deployment of some of these assets. And something that I was maybe a little bit surprised by just kind of researching this a bit was that you guys seem to have a very active governance community, actually, I think, compared to other places. And I didn't realize that ETH Plus was, it seems like deployed by a community member who's just kind of motivated to do so. And then obviously EUSD is from the mobile coin team. Can you talk about what inspires some of these people to go out and do that, what their incentive is, and, how some of those come to life?
Yeah, definitely. It's so funny. Um, it's been a very diverse cast of characters that have been interested in it for a whole variety of different reasons. We've seen companies deploy assets for very specific purposes, like MobileCoin. They wanted a permissionless, censorship-resistant, super safe stablecoin for their digital cash product to be used around the world. Right? It's their cash product, digital cash product, is called Sense. It's an app that allows people to send money around the world. And mostly there's a lot of users in Africa right now, actually, Latin America as well. But um, they came because they had a very specific problem that needed solved. Then we've seen the person that deployed ETH Plus Iridian was a guy that came to one of our hackathons and was very interested in um, uh, Ethereum safety and health of the ecosystem. And he really liked the idea of ETH Plus because by not weighting the backing by market cap, in the case that it were to get very big, it would actually help alleviate some of the uneven, or rather concentration and staking providers. And so that was like something that inspired him to do it. And with the yield bearing, some of the yield bearing dollars on the platform, actually. Tom Sawyer, a longtime RSR community member, wanted to build something cool, and he gets his little DAO gets a percent of the yield, right? And so he's actually motivated to make money from this, and so it's been like a total different reason for everyone. But it, one of the things when we built the protocol, um, the reason that we built it as a platform is because we don't know what the right answer is to how people should preserve their wealth over the long term. We're, it's a group of technologists and idealists that started this thing. And they were like, well, we don't know the answer. Let's build a platform so anyone can make one permissionlessly. And we've seen, as you mentioned, a whole variety of folks come forward to want to deploy these things. And they've all been very different. There's been actually like well over 1,000 things that have been deployed on the platform. Many of them are very, very small. Most of them have zero funds, but it's so low cost and easy to deploy a stablecoin. We could do it right now on this call. It's kind of
Interesting.
a fun thing. Yeah.
So, I mean, it seems like in that case, then you guys have had, I don't want to say luck, because obviously, this guy who deployed ETH Plus, for example, sounds like he met you guys at a hackathon, got excited there, right? That's a very intentional type of thing. Do you
hmm
guys imagine taking a more sort of active role in cultivating some of these people and encouraging them, or is it you've just seen kind of organic growth so far, and there's always good things popping up? How do you guys view that role?
Yeah, there's I'm gonna like butcher it, but there's that saying about luck where like put yourself in the right place and you get lucky more, right?
Opportunity
And
meeting
we try.
preparation, or yeah.
Yeah, there's some kind of like classic cliche saying there, but we the uh we definitely try to make it as easy as possible for people to deploy things on the platform. We've got a ton of resources for people that are looking to deploy things. Lots of information about that. The the What we found is like the most challenging part, and this is actually very similar to traditional um, finance products. The most challenging part uh, to growing the assets is growing the trust in them in the beginning. And so we've started, helping these community members that deployed it, helping them figure out how to build trust in assets that are smaller in the beginning and growing over time, right? And it's actually the same exact challenge that um, similar, not same exact, nothing's exactly the same, but a very similar challenge to ETF products in traditional finance. When they launch, I actually have a friend who has launched a variety of ETFs, and he's telling me how when they launch, it's like, the first couple million go in from the team, and then after that, get into 50 is really hard. Get into 100 is even harder, and then it's actually kind of a slow grind up from there. And once it's big, and then it's a trusted thing, and no one questions it anymore. But in the beginning, when it's a non-trusted thing, it takes education to help people understand how does the thing work, how does it, why is it safe, why is it something that they can trust, that they can use to use as a diversification tool, or use as a way to get yield in a single token, or things of that nature. And so that's the one of the big focuses that we've shifted to with the deployers and the community in general.
Well, on that note of the kind of ETF step ups of 50, 100 million, 200 million, I think you guys have had two giant step ups in look like March and June of this year. What fueled those? Was it DeFi integrations? Was it a new wallet that their users started using your assets, or where have you guys seen success in those big step function growths?
We've seen it, in a couple different places. There's been a huge amount of integrations that came online in throughout the spring. Morpho, like in the beginning, the only thing you could do with an R token was hold it, and then all of a sudden there was a bunch of dexes that had liquidity, and you could yield farm it there. And then there was actually there was incentives on Aerodrome all of a sudden got very big when base got very big in the beginning of the year, and that drove a ton of growth. The integrations of lending markets is where we've seen a lot of usage. Some of the largest users right now are leveraging ETH Plus like crazy on Morpho. The like, yeah, very, very large positions in Morpho for actually many of the R tokens right now. And at the end of the day, we, like everyone else, try to use incentives as efficiently as possible. And something we're always thinking about is how do we make incentives sustainable, efficient over the long term, et cetera. Um, and try not to fall prey to the classic airdrop math of everyone just turning.
Right. And I guess in terms of thinking about the health of a protocol, obviously your TVL is very exciting, great, up into the right chart. How do you think about the overall health of the protocol? I mean, what are your team's North Star metrics? Is it TVL? Is it number of users, wallet integrations, DeFi integrations? How do you guys think about that?
Yeah, it's a really good question. North Star's TVL for sure. That's like for a variety of reasons, right? TVL is very important because it demonstrates trust. It's a bug bounty. It's a proven resilience against hackers, right? For like TVL over time, you can think of that as like the metric of not getting hacked, etc. It's a great advertisement. uh, you know, the chart going up is a really, really good advertisement for a couple different reasons. One, it shows growth. Two, it shows that the thing is being used and grown, but it also creates like a FOMO thing of like, oh, hey, if we're not using it, or if those people are using it, why am I not using it, kind of thing, right? Um, the the other important thing though is definitely integrations. That's a critical thing that we think about, and not just in DeFi, but around the ecosystem. At the end of the day, my theory for the last 5 years has been that DeFi is going to be the infrastructure, but no one's going to use a ledger, right? Like I'll probably always use a ledger because I'm a psycho, uh, but regular people are not going to use a ledger. I've tried getting so many friends and family set up on ledgers. No one's going to use a ledger. The um, the reality is that people will interface with blockchains in interfaces that they don't know are interfacing with blockchains, right? And DeFi will be the thing that powers it behind the scenes. It'll power the products, it'll power the trading, it'll power the leverage. I don't think that it's going to be, sign in via wallet, connect with your hardware wallet in order to make a trade. It's going to be like use Face ID, right? And so, um, the we that's a very long way of saying that we don't just think of DeFi integrations, but we also think of consumer integrations. A really exciting one that just happened recently was Holy Held, which is a smart wallet in Europe that actually allows people to spend from any token using a debit card, and it's really cool. It's like all the building blocks, but not just DeFi, but also fintech coming together to create a product that people actually care about. This is, slow me down if I'm preaching to the choir too much here. But I think one of the biggest mistakes that anyone in crypto does is talk about crypto in their marketing. I think it's like it's the equivalent of Netflix being like, we use AWS, watch Netflix. It's like, why? Why would anyone do that? That's like crazy talk, right? They talk about fast streaming. They talk about a huge library selection, right? They don't mention the database technology. And for some reason over the last 10 years, most crypto companies lead with crypto. Why are you talking about the database technology? That's crazy. You got to talk about the problems that people are that you're solving. And so the big, we try to focus on diversification, over collateral, like safety that comes from over collateralization, et cetera. Um, and uh, I think Holy Held's done a really cool thing where they're doing the same thing. They're like, spend your assets where you want to spend it, and hold it in the way that you want to hold it. Ugly Cash does a similar thing. They talk about how easy it is for you to send money to your family in Latin America. They don't talk about the fact that they use stablecoins to do it. That's like in the, you got to dig and get in the FAQ to find that information. But the what people care about is like, I want to send money to my family in $20 increments and not get a $20 fee. Right? That's which is the reality on the other side.
Yeah, and you bring up uh, a bunch of interesting points. I agree completely that, and I have this challenge with my friends all the time. I'll show them something like our site vaults. They'll get excited about a high yield. And then it kicks off the process of, okay, well, how do I actually get money into that thing? And it is this giant, I think, kind of consumer nightmare. I guess one thing that I kind of go back and forth on is without someone evangelizing crypto, like I do to my friends, and I'm sure you do to your friends, the discovery process of how you learn about crypto, I think, could be kind of challenging. I think the way you guys are going about it by focusing on some of these markets that do have very high inflation, are looking for a better way to preserve their wealth, and then offering them a yield is kind of a great entrance. Are there other places you've seen some of these stablecoin wallets or Holy Held or um, Ugly Cash, for example, where they've seen success in user acquisition? Is it in the spend with stablecoins, or where are they seeing some of that success?
I mean, so I know you're calling in not from the USA right now. I'm not sure if your location is doxed. That's why I won't say it. But the the reality is that crypto stablecoins in the US are not very useful. Like, yeah, sending there's no better advertisement for stablecoins than actually sending a wire uh, from a bank account. But for the vast majority of Americans, the banks work for the most part until last year. Uh, the um, the you've got reasonably stable money. It only inflates 10% a year or so, which compared to the rest of the world is pretty good. And you have banks that work. It's not going to steal your money. You don't have to worry about putting money there where you might not get it back for the most part. You've got FDIC insurance. We have this great credit card, this like honestly incredible scheme we've got going where you can get cash back on credit cards, right? As long as you pay it off, you're fine. Like the whole thing, like the money works pretty well. But that's not the case in most of the world. And that's actually where stablecoins are most useful right now. And so, like, to me, it's like the classic Clay Christensen disruption model thing where, you start out with use cases that are like smaller and more niche and work your way up as the technology and the products get better. But like, to me, stablecoins are most useful in places in the world exactly as you described, where the money supply isn't so predictable and stable and maybe quite inflationary, where the banks don't work that well, where you're not able to hold the assets in the bank that you want to. Many countries in Latin America, it's actually illegal to hold dollars in a bank account. The only way to get dollars is on the black market. Obviously uh, throughout, those places in the world, stablecoins are actually much more popular, right? Like, we did a team on site in Argentina last year, and the thing that was crazy to us is that all the money changers there know what Tether is and use Tether every day, right? On Tron, of course. Uh, and uh, the interesting thing about that to me is that it's just a thing that's solving a problem. They don't care about the tech. They don't care that, Tron is Justin Sun's blockchain, that, has so and so technology XYZ. They care that they can send dollars and their friends accept it and everyone knows what it is and everyone's got an address and no big deal. Um, and and so yeah, that was I feel like that's kind of the essence of crypto adoption throughout the world is people are using it to solve problems where it's a problem.
Yeah, the USDT on Tron is almost the admission that the tech doesn't really matter, and it is the are you solving a problem? Is it cheap? Is it easy to access? And you know maybe some other things around censorship resistant, and like does Binance support it? I think those are like
I
the
know
big key factors.
it's true, and it's one of those things that's like if you think deeply about it, and you are worried about certain things in the world happening, the tech does matter, right? But for the vast majority of people, they care about getting their money from A to B, right? And so for those folks, they just care about whatever's easiest, and the things you mentioned. Um, I do want to say, like, I do think the tech does matter because I think that the system that we're building that is censorship resistant and anyone can interact with transparently. I do think it actually creates a more interesting, better financial system. We did our first our first of hopefully many annual ecosystem get-togethers, and we had Dr. Thomas Hogan uh, give a talk on the gold standard in free banking, um, and the one of the interesting takeaways to me was uh, about how all of the parallels from the free banking era there are in the DeFi world, and a lot of the problems that free banking that the banking system generally runs into. His theory is that a lot of it comes from regulation. Like oftentimes regulation actually causes the banks to fail, causes there to be bank runs, etc. Like in areas where there's like no government deposit insurance, there's actually less likelihood of bank runs. Was some of the data that he presented, and like to me, like Aave and Maker, like Maker is a free banking bank, right? No one's coming to save those people. But people use Dai because it's useful. You can use it in a variety of places. Um, the and like Aave is like the true lending rate. It's like what is the market willing to pay for dollars right now, right? And this is kind of a spicy take. Olympus DAO is kind of like the Federal Reserve, right? Where they, uh, it's like, what's the interest rate today? It's like, we're just going to decide and we're going to print more, right? And it's like, it's kind of an interesting thing where I feel like we're moving. DeFi is this like, I don't know, the like perfect, like most pure free banking vision being played
Mm,
out in real time. And so I am hopeful that the thing does work because I think the tech is good.
mm.
But yes, that was a bit of a diatribe.
No, that was great. And specifically, you just mentioned your kind of onsite that you guys had in Argentina. And yeah, I agree. I'm wrong to say that the tech doesn't matter, but that for this kind of class of user that I do think a lot of crypto people want to help and serve, to your point, they're not thinking about what blockchain it runs on. I do think, a lot of times it comes down to just, does Binance support it in a cheap and easy way?
Totally.
Did you guys have any other learnings, or, either contrary learnings or things that sort of broke some of your beliefs on that recent trip to Argentina?
I think so there's very different perceptions around the world of different things than there are in the U.S. And I think the one of the things that has been interesting and surprising to me is that well, people still want the dollar; they don't necessarily trust the U.S. And so Tether is like this kind of renegade that actually has very high brand value around the world. And so, like in Africa and Latin America, Tether has really, really high brand value. In the US, it's got terrible brand value. Everyone thinks it's a scam, right? And it's just this like interesting juxtaposition that really comes down to um, like I hate to get into this, but like the U.S. political system, right? And it's creating this situation where people around the world don't necessarily trust the U.S. as much anymore, even though they still want the dollars. And so I think that that's like one of the most jarring learnings um, that I saw down there. The other was just the candidly like being pleasantly surprised at the ubiquitousness of stablecoin usage and how widely accepted it was. It was something that like many people that we ran into knew what stablecoins were. By the way, that's not the case here in San Francisco when I walk around on the street. But the tech capital of the U.S., that is definitely not the case. There's like more people in Buenos Aires that know about stablecoins than there are in San Francisco, which is kind of a hilarious, wild thing when you think about it.
Very interesting. Uh, yeah, and I guess really it just kind of comes back to a lot of the things we've talked about, just in terms of building for this somewhat different audience, right? I mean, these audiences, whether it's Argentina or any other country really that wants to preserve their purchasing power, is a different segment than some of the people we've talked about, kind of DeFi wise, right? They may have a far deeper understanding of stablecoins, but they probably don't know yet what Morpho is or how they can leverage Loop to earn a bunch more on their funds. So just kind of that different strategy is very interesting to
And
see how you guys balance it.
so Actually, so the last thing to say on that front, and I know we're kind of running out of time here, but the classic banking model is you get a bunch of deposits from consumers and you lend them out to businesses and institutions, right? That's like it doesn't technically work like that anymore for a whole variety of reasons, but that is like the technical classic example of how banking works. And what I actually think is pretty interesting about our tokens on the Reserve platform is it does get, if a bunch of people hold these things and, whether it's for saving or just for payments, it does actually gather together a bunch of consumer deposits and enable lending protocols to lend them out on the back end. Because for the most part, they are backed by tokenized lending positions in places like Aave and Compound and Moonwell and Morpho and et cetera. And so I do think it's like a very good fit. The trick is how do we get tons of consumers to use and hold them?
Correct, correct. That is the magic. On
Yes.
that note of some of the comparisons to the traditional banking industry, have you guys gone down the route of thinking about integrating real world assets, kind of whether tokenized T-bills, things of that nature, and maybe how that diversifies some of the speculative borrow risk of crypto, right? Where things are much more supply demand driven.
100%. The vision when we launched the protocol was you can use any tokenized asset as a piece of the backing. And the idea is that people can hold a portfolio of stocks and bonds and crypto and tokenized dollars and all kinds of different things. The We actually do have one um, asset that kind of falls in this category already. Mountain USDM as something that's in some of the tokens on the platform. There's also, there's been a really interesting push over the last year, especially as BlackRock comes into the space, where there's been a massive amount of tokenized securities coming on chain. And so something that we're very excited about is, making it very easy. Traditionally, securities are mostly held, especially by individuals, inside of diversified assets, right? And so we're very excited about the opportunity there.
Very cool to hear. Yeah, I mean, I would say kind of most things around the tokenized security space, I think I've had trouble taking off as a result of some of the transferability, KYC requirements, things of that nature. I do think that this form factor of putting several of them in a basket, maybe having some kind of intermediary KYC done by whoever kind of the strategist or the proper term in Reserve is, that handles that KYC and then is maybe able to purchase those tokenized securities, offer in a basket. I'm not exactly sure, but that's definitely been a kind of persistent issue.
Yeah,
I,
it's something the industry has to figure out.
right.
The like for better or worse, I don't think like my belief aside that I don't think KYC is an effective way to solve the problem that it's aiming to solve. Uh, there is a reality that I don't think it's going to be like skipped over, right? And so someone's got to figure out like what is the tech solution where we can get the three-letter agencies in the United States the information that they need in order to make them happy, but still make it a viable consumer experience.
Yes, and I think it's specifically around the seamless element today. If I want to enter one of your assets, if I want to enter a Morpho vault, it is so easy. And there isn't this cumbersome KYC check in the middle. There isn't this risk of losing my personal information. So I'm not sure. There's obviously KYC or kind of permission chains like a Plume or Kinto coming to market that are maybe unique approaches here, but we shall certainly see.
Yeah, it'll be really interesting. I mean, you can also imagine a centralized provider, KYC and wallets, especially smart wallets, so that you can't just like get the NFT and then sell the wallet. Um, but TBD what actually happens there. It's gonna be interesting to find out.
Maybe we can actually finally use some ZK magic on some of this stuff to prove people's
Exactly,
identities.
exactly.
Well, as we're kind of coming up on time here, I realize I never asked how you actually wound up at Reserve. So I
Yeah,
think you've said you've been there for about 2.5 years now. You worked in traditional fintech before. What brought you in? What attracted you? What got you excited originally?
yeah, definitely. So I've been following crypto for the last uh, 11 years now, which is crazy. And it was always like a hobby, a side thing. And then in 2020, I used MakerDAO for the first time. And it was really mind opening for me because I was working at the largest consumer lender, the sixth largest mortgage lender in the US at the time, a company called Better. We uh, and we were doing a ton of lending volume, right? But we also had 500 engineers and 10,000 employees to, to do all of that. And I led the automation effort team there. And, it was like literally a team of 100 people that were building automation tech. And I used MakerDAO, and there was, and then I was like, wait, this was really easy. I just got a substantial loan in a couple seconds and a couple clicks. Obviously, it's a very different type of loan, the whole thing. Um, and you look into it and you're like, wait, uh, like six engineers built this thing, and wait, it's doing more lending volume than most of the mortgage lenders in the country. Like this is crazy, and so it led me to dive very deep. And I kind of came up with this hypothesis around DeFi being the infrastructure of all fintech and all finance in the future. And I wanted to figure out where to jump in, specifically with stablecoins, where I see there's a lot of adoption. And with a very smart team, and so I was very lucky. Nevin, the founder of Reserve, and I connected, and it was a perfect fit. Um, the to come in and help create this nascent labs group and join the efforts that have been ongoing for a long time. The protocol is very far along in development. The team had put a ton of great work and effort into it, but to help figure out how to launch this thing and how to grow it. And so it's been a blast. I joined 2.5 years ago and haven't looked back. It's a blast.
Yes. Crypto does that. It's hard to look back to prior careers and lives after coming in. So
I mean, you get to work with really smart people and really cool, interesting problems, and it's a crazy group of in a crazy industry to do it in.
absolutely.
Couldn't ask for anything better.
Absolutely. So I guess as we're wrapping, one, is there anything I haven't asked about Reserve that you want to talk about?
Um, Honestly, you covered it. You covered it pretty well. I don't have anything else to add.
Great. And then are there other products or baskets or kind of R tokens that you would be excited to see people bring to the platform that are not out there yet, or maybe smaller ones that haven't taken off yet?
So there's a couple things that I'm interested in on that front. I think there's a lot of opportunity for some crazy ones, like having leverage inside the basket, or um, having it be backed by the R token itself. Some kind of leverage looping where you have the LP of itself back the token. There's some pretty
Mm.
interesting things there. I think there's also, I'm pretty excited. There's in the next month or so, there's going to be a bunch more. There's probably going to be a bunch more collateral plugins on Base in particular, and so I'm excited to see. There's like already a high USD stablecoin there, but it'd be pretty cool to see like what if people really got that yield going with like Aerodrome LP tokens, and all of a sudden you're looking at like 15-20% yield with reasonably safe, stable products underneath. And so I think that could be pretty interesting and fun. Um, and then you actually mentioned it already, but I'm very excited to see, BlackRock and other institutions come into the space, more tokenized RWAs. How can we get those things into, ETF, on-chain ETF like products, or as we've started calling them, DTFs, DeFi traded products.
Interesting. I like that.
But
That's good. Good
yeah,
rebrand there.
yeah. So hopefully DeFi is DTF, but we shall see.
It's a good slogan. Get that on the t-shirt. I'll wear it next time we have you guys on.
Awesome. Ryan,
Cool.
this is a lot of fun.
Yeah, likewise. Thanks for coming on. It was great for me to go, use this as an excuse to go deep on reserve, and hopefully our listeners will be excited and they'll listen to this and create their own R tokens.
Yeah, and probably discover it on Vault.
That would be great. All right.
That would be great.
Thank you
All
very
right.
much for the
See
time
you,
today.
Ryan.
Talk soon.